What's up? What's up? What's up, everybody? Good morning. Happy Wednesday. Welcome to the morning show here on Stock Market TV. A lot going on, a lot of headlines. It seemed like a lot of headlines yesterday and today. I thought yesterday was a pretty interesting day for the market, and we'll talk about it. So do what you do. If you're watching on YouTube, hit that thumbs up for me, please, and thank you. If you're watching on stockmarkettv.com, you can go over to YouTube, hit the like there as well. If you're watching us on Twitter, head on over to YouTube. Hit the like button. All right. We got Jay Woods today at 9. We got Mary Thwaites at 9:30. A lot to get to, so let's roll.
Oh, where do we even start? All right. What's your favorite Charlie Munger quote? Let's get it over with.
So my favorite is, if I can be optimistic when I'm nearly dead, surely the rest of you can handle a little inflation.
It's a good one. That's a good one. Spencer?
I like, if you want to, I may butcher it, the exact quote, but something to the tune of, the best way to get a good wife is to deserve one.
That's a good one. That is a good one.
I've always thought was so funny.
He's not just smart. He's
like,
hilarious.
we don't all deserve a good wife, apparently.
By the way, he says that about all things. The best way to get what you want is to deserve it. He threw in wife because that's a funny example. But he's right.
And yours.
I love the fact that when he turned over to Uncle Warren, and he tells him, if people weren't wrong so often, we wouldn't be so rich. That's Charlie Munger, closet technician, very close follower and observer of humans and human behavior. That makes him a technician in my book.
What is the company that he's the chairman of? Is like Daily News something?
DJCO is the ticker.
It's not Dow Jones, is it?
No.
No. It's not. It's Daily Journal. So maybe the ticker is wrong. DJCO. It's Daily Journal is the company. What's the ticker?
The same way that they do the Berkshire annual event, he kind of sits up there and just like fields questions on his own. Yeah. I think like writes a little letter to shareholders too every year, and it's just full of gems.
There's an interview. Sally Pancakes interviewed him once. It's a good interview. You can go check that out. You should have Sally Pancakes on.
So
you guys know Julia LaRoche?
Yeah.
I'm not familiar with the nickname, but all right.
I think it was before your time.
Yeah.
So
probably.
The natural question that people are asking is, does the stock go down? And again, thinking through just the news from last night, does the stock go down when Mr. Warren Buffett eventually passes away as well?
Stock's not doing anything free market. It's actually flat. So
I mean, when you're working on a succession plan for decades, it should kind of soften this kind of blow.
Everybody was taking the under on these two. Living this long, everybody had the under, myself included.
Good for them.
Yeah. Good for them. Good for Charlie.
So you said on the chat, Charlie had all his faculties until the very end. I mean, what more could you want for in life, right?
Yeah, for him
to have your brain to the end. I mean,
100 good years. Wow.
Seriously. Shout out Charlie Munger, rest in peace. But I want to stick on this theme of people being wrong. You know, people are wrong so often. Particularly when they get like very emotional and angry. And as investors, it's important for us to pay attention to that sort of thing. And also the track records of those who are consistently wrong, like economists, like sell-side analysts, right? Like these groups of people are criminally wrong. Particularly at the most important points. I want to go back to coming into this year. Go to slide 2, Spencer. And This is exactly what Charlie Munger was talking about. If people weren't wrong so often, we wouldn't be so rich. Wall Street strategists had the S&P 500 falling this year. Hello, for the record, they all had it ripping going into 2008. For the record,
and 2022 and 2022.
We could keep doing this, right? We could keep doing this. But the point is, coming into this year, Wall Street strategists thought the S&P 500 was going to fall. And if you listen to those strategists, which portfolio managers are foolish enough to still do, which is hilarious. Over on the left, you've got the strategist targets actually in the red coming into this year. Meanwhile, S&P's up over 20%, NASDAQ's up over 46%. Wall Street strategists, some of the worst humans on the planet with respects to predicting markets, again, could not have gotten it more wrong. I think they literally thought the market was going to go down. For the record, they never think the stock market's going to go down. They always think it's going to
Hold on. JC, hold on. This chart down here, is this saying that for the first time in, over 20 years, almost 25 years, that Wall Street analysts were predicting that the market was going to be lower this year when we had a record first half of the year?
Yes.
Huh.
Also, when you look at the fund manager survey, this is investors' risk appetite. Are you taking more than normal risk levels? And the answer was 0. Actually worse than during the great financial crisis in terms of people putting risk on. And while none of those portfolio managers were putting higher levels of risk on, it was exactly the time to be putting higher levels of risk on. And fortunately for us and those paying attention and listening to Charlie Munger's advice of or comments that people being wrong so often is the reason why we're all so rich. As part of the reason why we're all so rich. Taking the opposite side of these groups of individuals consistently is incredibly rewarding. And I could tell you for a fact that I wouldn't be as rich as I am if it wasn't for people being wrong so often. I see it. I see it all around me. I see it as an investor. People who, like sell-side analysts, economists, like these guys, they're the worst, right? We know that. It's not anything new. We know they're the worst. And even people around me, like people who didn't believe in me and in the things that I was doing and tried to bet against me or left the company that I was running. I mean, they all look like fools. They left so much money on the table for making those decisions. And I bet on them being wrong. And it's been very rewarding. So I think that just to kind of circle back, my favorite Charlie Munger quote, the ones you guys chose are great and they're hilarious. But in terms of practicality, I think this is the best Munger quote. If people weren't wrong so often, we wouldn't be so rich. It's a good lesson.
Classic. Yeah. Instant classic. I'm looking through a list right now, see if there's any other.
There's so many, dude. It's like Yogi Berra. Like they got like books on his quotes. Like he's like a Yogi Berra guy.
The one about EBITDA and bullshit, right?
Yes, that's a great one. Strazza. This is a good Strazza question.
Yeah.
Charlie Munger said, when you see the word EBITDA. What did he doesn't even pronounce it EBITDA. Like he pronounces it like
I have no idea how
he says like EBITDA or something like that. It's funny the way he says it. But anyway, he says whenever you read the word EBITDA, just replace it with the word bullshit.
Yeah.
Now as an accountant in a former life, CPA extraordinaire, fundamental analyst as a side hobby. Strazza, why don't you explain to us what Charlie Munger means exactly by calling EBITDA bullshit?
So EBITDA, everybody probably remembers this from Intro to Accounting. It's your earnings. So it's like the bottom line. We all care so much about that EPS line, but then with a bunch of stuff added back. So it stands for earnings before interest, taxes, depreciation, amortization. A guy like Munger would hate something like this because, well, at least taxes and interest, for example, are some very real expenses. So why are you backing them out, right? And you can argue for depreciation and certain amortized costs as well. So You do a lot of funky stuff below that revenue line. Spencer knows how I feel about this, right?
The Chinese are very good at that, right?
Yeah, right. You can listen. Revenue is typically revenue. Revenue recognition fraud almost always gets out, before too long. It's hard to bullshit your top line. It's a simple journal entry or 2 journal entries if you have a receivable, right? It's easy accounting. Once you get all the way down to earnings, they've had 100 chances to play with that number, do some creative accounting, write some things off, take some gains, whatever. There's a lot of.
And by the way, it works in both ways. And in most cases, it seems like the bullshit is the shenanigans that takes place. But in some other cases, it's the opposite, right? The number looks worse than it actually is. It's actually better, right? What was it the other day? It was was it Uber? It was a stock that you were like, wait a minute, this is a one-time.
Yes, that's right. And yeah, one-time write-off, right? Not a recurring expense, and that really just made their earnings number look terrible. When if you added it back, it wasn't so bad. So a good company, and a lot of tech companies and startups have done this over the years. Like good CFOs will use that as a way to use the earnings line, or what these companies do is adjusted earnings, right? Where they'll say, this is a really unique thing to our business, and we think this expense should be added back. Here's why. Blah 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 blah. A lot of times it's stock comp. I'm talking about other stuff. They'll add stuff back, and that earnings number will actually be a better representation than maybe the basic GAAP EPS. So that's the idea. That's what these adjusted earnings numbers should be, but oftentimes they turn into something else.
Well, I appreciate that little educational tidbit. Any questions on that, Spencer? You ready to hit the markets?
To quote Charlie Munger during the Berkshire Hathaway annual meetings, I have nothing to add. So let's go state of the markets.
I see what you did there. All right, so I think that we should start with slide 3. We've been pounding the table again and again and again. I mean, it's really been exhausting talking about how the key in all of this remains the dollar, not the Trump or the Biden or the inflation or the Powell or the war or that or the other war or the other war or the new war or the invasion or the other invasion. It's not interest rates, federal funds. It's not M2. The M2 is one of my favorites. The recession, right? Of course, the old classic, the recession. The yield curve, another classic yield curve. Government shutdown, right? That's another good one, right? Credit crisis.
All right, are you having fun now? I have a question.
It's been the dollar all along, Strazza. It's been the dollar all along.
No arguments here.
So my point is, sorry, Strazza. My point is, here's the performance of some assets since the dollar peaked on October the 3rd.
So hold on.
Gold and silver, Qs, everything's up. Everybody's making money.
Right. It's a bull market party out here. I've seen you put this chart out before, but some new additions up top here. What did you add here? You added some assets.
Yeah, because when you think lower dollar, I mean, at least I think of gold, silver, emerging markets, right? Like those are the things that like immediately come to mind, right? So I think it's interesting. Remember last year, like literally a year ago, we were having this exact same conversation. The dollar peaked at the end of September, right? Yeah. And when you did the math a few months later in terms of the performance of assets, obviously stocks ripped. We made a lot of money. Everybody's happy. But emerging markets underperformed developed markets, which was really surprising to me anyway. And I think to you as well. And we're seeing the same thing. Yep. We're still seeing developed markets outperforming emerging markets in a weaker dollar environment, which is interesting. Silver outperforming, gold outperforming. That's not a surprise. Silver outperforming gold, also not a surprise, right?
I think what stands out to me is that maybe in the past, when the dollar has rolled over and shown some weakness, it's been mostly stocks or cryptos that we've been talking about. But now you're seeing that momentum kind of move into precious metals. Now it seems like maybe they're experiencing the biggest tailwind from lower dollars. And that's a little bit of a change, I think, over the past year.
Look at throw up at the emerging market currencies slide 4.
Oh, we're gonna do these again?
This has been the tell, man. New 52-week highs in emerging market currencies. You think that happens in an environment where the financial system's about to fall apart?
I think there were a lot of tells, but sure.
The Polish zloty was the tell all along, my man.
This is a pretty cute one.
Throw up the zloty. Throw up the zloty. The zloty making new 52-week highs. I just wanted to throw in a chart of Poland. Spencer, throw up the zloty. Can't have a civilized conversation about the stock market without bringing up the zloty these days. You guys were focused on the Polish zloty and emerging market currencies. You would have been buying stocks very aggressively a month ago or more than that, as obviously we were. Who knew? Who knew it was the zloty all along and not the credit crisis?
Are we resolving higher from these little coils that we talked so much about yesterday here today?
What? Explain to me what you mean by these little coils.
November 14th. So market internals peaked this month following this nice reaction we had off the spooky Halloween lows. Now, if you look at something like the Russell 2000, home builders, a lot of charts look this way, right? Where we've just gone up and then sideways in these tight little flag patterns. Are they resolving higher here today? And does it have anything to do with this move in interest rates? No? Maybe?
I mean, why? Because the new 52-week highs list peaked on November the 14th.
A lot of stocks have been sideways. It's been a corrective period for some groups, maybe not others, but some have gone sideways since November 14th. So I'm thinking if we resolve higher from these little coils in those groups, then the strongest ones are probably still going higher.
What's a good example
of these flags I'm talking about? Russell or homies.
Russell 2000.
Yeah, Russell 2000. November 14th, straight up, and then tight since then.
Homies too.
Homies real tight.
Yeah, I'll throw up the IWM.
So I guess
like
my
homies, like ridiculously tight, like crazy tight.
Yeah, it's weird.
Throw up slide 6 there, Spencer.
Point I'm trying to make is while the best stocks have continued, just dripping higher, almost in a shocking way. Some of these stocks have been down like 2 days in the last month. These things have been going sideways, a little correction. If these are going to resolve higher, I don't know. See a lot of green on your screen.
I mean, they could, here, I'll throw up the, I got here the.
This goes back to that conversation about we have to correct, right? Well, was that it? We have to correct. We got to give some back. And going straight higher for 4 weeks. Not everything.
Not at all. People who say that, like it's obvious, like they haven't actually looked.
Some things, some things do, JC, to be fair, look really extended. I'm seeing RSIs over 80s, things that just are up every single day. So some things do look extended.
Throw up slide 7, Spencer, the new slide 7.
Everybody is so into Microsoft these days.
Yeah, and so here's what Strazza's talking about, that sideways consolidation, that bull flag. But just to circle back on the Microsoft, guys, we talked about this in November, on November the 1st. I specifically was shocked, really, that Microsoft was up 7.5% for the month of October. 7.5%. You were telling me the world's coming to an end, recession, the Powell, all the things, the sequestration and the sequester and the taper and all the things that scare people. They were telling me all those things. Microsoft was up 7.5% in October. So are you surprised that it's still ripping? It was tipping its hand.
Also, just kudos to all of us for, once again, absolutely nailing it when it comes to AI. Everybody wanted these funky, pure AI plays, wanted to buy these micro caps, these small caps, these crap stocks. And we've been saying it for, 6-8 months, all year. The best AI plays are your Microsofts, your Googles, your Apples, your Metas, right? It's the big cap tech. And we're seeing it in a huge way.
And by the way, it's and to reiterate Strazza's point, yes, that is exactly what we've been doing and what we've been saying. But let me explain why. it's not because Strazza and I are some kind of like AI experts of any kind. Actually, quite the opposite. I probably know less about AI than most people in the world, and I'm okay with that. It's very confusing to me. I'm good at other things. I'm good at like baseball and wine. I don't know anything about AI. Every day I feel like I get dumber when it comes to AI. But the strength has been in Microsoft and in Adobe and some of these other software stocks and Microsoft.
Yep.
That's why we were pointing to those, right? Not because like we are experts in AI. We know nothing.
The charts were tipping us off since last year about this. It was just these mega caps working, and I think a lot of it probably had to do with AI. It's not rocket science either to think that they would be the ones benefiting the most again from the next mega trend in tech.
No question. Okay, I have a question.
Something's been bothering me though. Something's been bothering me the last, I don't know, the last maybe couple days, couple weeks. Because JC keeps talking about, just looking at when the market bottomed, and the market is of course a little bit of a misnomer, but I'm talking about the indexes, right? The indexes all really kind of bottomed when? End of October, right?
Middle of October.
Of last year or this year?
No, this year. Sorry, I'm talking about this year. Yeah,
Late
October 3rd was the day that the new lows list peaked.
Yeah,
which is also the day the dollar peaked.
October 27th is the date you're looking for, Spencer.
The 27th. All right. Well, again, depends on the index. We'll call it late October, right? Coincides with what else was in late October?
Halloween.
And sure, that's a good one. And also the most recent FOMC meeting, right? That was also late October. It was October 31st and November 1st.
Does anybody actually care about those things?
No, come look. I mean, it seems to me that they do sync up awfully nicely.
It was
right?
CPI. The market bottomed 3 weeks earlier.
It was CPI.
All you had to do was count.
Guys, it was
the stock. I'm talking about the indexes.
Right, but the indexes are a poor representation of what the stock market is actually doing. If you actually took the time to count, the market bottomed on October the 3rd.
But the performance of the indexes, and I have no data to support this, but I would imagine that is the driver of sentiment. It's the indexes, right? That
part of it, yeah.
Right. So
one would think yet with the S&P 500 returning over 20% this year, NASDAQ returning over 46% this year, and the Dow less than 2% from all-time highs, these indexes that you speak
I'm going
of,
off on a tangent.
Hold on. These indexes that you speak of that should drive sentiment, as great as these numbers are, sentiment is still down in the dumps.
I shouldn't have brought that up. I'm getting distracted. Let's go back to my original point, which was the indexes really bottomed at the end of October, which coincided with the most recent Fed meeting in which they said for the second time in a row, we're good. We're going to chill. We're not going to really, we're definitely not going to raise, and maybe we're going to think about or not think about cutting on, in 6 months or whatever. So, to say it's not the Powell, maybe if you're looking at the new lows list, sure. But if you're looking at the indexes, it is awfully. They line up awfully well, right?
If you're not looking at the new lows list, you're going to lose.
Spencer, you're right. JC, what you're saying is also true, but different. Yeah. What I'll say is this. A lot of times it's not so much the date or the news or the announcement from the FOMC. It's just getting that behind us. Maybe the market was ready to make that move. It was ready to rally. The FOMC day just being behind us and then more certainty being present.
Okay.
Then is like a catalyst to
Ready, Strazza, watch this. Magic. Can I please have a Dunkin' Donuts coffee? Whoa. See that?
Hi, Morgan.
Okay. But yeah, no, I agree with you, Steve. Right? Having it passed is almost, if not more important than what actually gets said. So JC, even you can probably get behind that idea, right? Which is like
they flip the buy switch. They flipped the buy switch to see the green light. No Fed for another month. Okay.
The market bottomed almost a month earlier. I don't want to hear this bullshit about the Federal Reserve. It's so dumb.
It's like when you're driving. It's like when you're driving on the highway and you see like a cop up ahead and you slow down. Not because you think like the cop's not really like. What are the odds the cop pulls you over? Pretty
yeah.
low, but you slow down anyway. And then what do you do as soon as you get past it? You go back up again, right? So,
That's what it is. Hey, he just did it. That was a good one, JC. You gotta give him credit for that. Great
I
analogy.
don't know what that has to do with the new lows list. I'm confused. Like, he's
analogy.
right, but I don't know what that has to do with this conversation.
You have the best analogies. Hey, JC told us to short Starbucks. Why don't you defend yourself?
I'm not shorting Starbucks. We're a Dunkin' Donuts family.
One hole. Stop spreading lies.
Yeah, nobody's shorting Starbucks. We're a Dunkin' Donuts family, and I don't get a vote in the matter. So even if I didn't like Dunkin' Donuts, we'd still be drinking Dunkin' Donuts. My wife is really into it. Like when we go to Massachusetts, she's like in heaven. She's like, "Oh, Dunkin' everywhere." I have a question, but let's do a quick rundown of the markets. I have a good question for all of you guys.
And then I want to show the NVIDIA thing. Quick NVIDIA thing.
Cool. Dow futures up over 100 points. One thing you'll find in bull markets is stocks go up quite often. Something I've just witnessed over the years. Dow futures up over 100 points this morning. S&P futures up over 20 handles, 50 basis points. NASDAQ futures leading the way, up 100 points, 60 basis points. 30-year bond futures up 30 basis points. Gold flat, silver flat, copper flat. Oil up 1.3% this morning with the dollar inching higher. Volatility down again, and rates on the 10-year yield slightly lower, down towards 4.3%. And of course, good old BTC, Bitcoin up 350 points today, up towards 38,184, hitting new 52-week highs today. Do I have that right? Yes, in fact, new 52-week high for Bitcoin, doing very, very well. Ethereum up 30 basis points. Solana up 4.3%. Looks to be resolving this bull flag higher. And that is your quick futures rundown of the day. Spencer Israel, my question, slide 9. I think this is a great question. And technical analysis doesn't necessarily give you all the answers, but it sure goes a long way in helping us ask the right questions. And I think this is a great question. And for the record, I don't have the answer to. I don't have a lot of answers. I certainly have a lot of questions. The question is, gold relative to the NASDAQ. Do we have to retest those all-time lows, or have we seen enough?
I think when it comes to these relative ratio charts, trend is a lot more important than level.
And the trend is lower, right?
I wouldn't look at like former lows in the same way I would look at a true price chart of just one asset and say, oh, maybe those lows act like a magnet. I don't know if polarity is as strong.
I mean, you've seen it a lot, Strazza.
Yeah.
You want to start whipping out examples?
100%. I'm not saying polarity is not important. I just think the direction of the trend, which is lower. So I guess my answer would be probably. It probably does test.
It probably does test. That doesn't necessarily mean gold needs to go down.
That's right.
It doesn't necessarily. Both can go down, and gold just goes down more. That's another possibility. Both can go up, and gold just goes up less. That's another possibility. But you think the higher probability outcome is we retest those lows. We would have to take out these recent highs to invalidate that. Right?
Throw up my interest rates chart that I just dropped in the chat, because I think this is a part of that conversation.
That March peak in this ratio, which is when everybody was telling us that this was a financial crisis because 3 banks no one's ever heard of disappeared, right? Mm-hmm. I wish more of them disappeared, to be honest with you.
Yeah.
Nobody cared. I don't understand why they were making such a big fuss about it. I lived in the Northwest. I never heard of these banks, you know?
It looks like the rest are making it out alive for now, too. How important is this, JC, when it comes to gold?
I think it's really important because the higher real yields have really put a damper on gold. But we've been talking about how despite the rising real yields, which was an epic rise in real yields, gold held in pretty good.
Sure
right?
did.
I was like, I'm pretty impressed, like just how well gold held up despite that ripper in real yields. Like I was pretty impressed by that. I'm not gonna lie.
So lower rates, nominal rates, which we're showing here, will typically coincide with lower real rates. Take that pressure that you're talking about off of precious metals. Maybe that would be the theory.
Right.
Right?
Can I interrupt
Yeah.
this? Can I bring Jay Woods on?
Please.
do. Yeah.
Please.
All right, we got Jay Woods, Freedom Capital Markets, coming to us live from the floor. Let's bring him on the show.
Woo.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh,
Hey, Mr. Woods. Look who's fancy. Who's fancy?
Looking good. Looks
Can you hear
serious.
us? Can you hear us?
How's that
Uh-oh.
Wi-Fi over at the nice?
Yeah. Well, he has to
think
go
that-
up above.
You,
Hey,
Jay.
this connection is not.
what's up, my man? Are you
What
there?
is up, gentlemen? I'm hoping this connection's okay. I'm
okay.
here. Can you see me? Hear me?
We hear you, man. You're looking good these days. You're looking slim.
Nice jacket.
Nice tie.
Yeah, I lost a little weight. It's the jacket. I put on a tie. Not for you. I've got other things to do, but I try to impress people. I see you're dressed up for me, JC. I appreciate that.
If I didn't know any better, I'd say you're a pretty important guy, Jay.
He's important to me.
Yeah. Look at that. Look at the suit. All right. So let's talk.
Are you
What's
good?
going on?
Can you hear us, Jay? Are we good? Are we solid?
I think so.
It keeps coming in and out, but I think we're on good footing now. So I blame the Wi-Fi here at the end.
You'd think the New York
If it
Stock
kicks
Exchange
out, I'll
would
just
have
dial
good
in on my
technology.
phone.
Yeah, that actually might be-
Cybersecurity in place to.
You need some Starlink over at the Nicey.
Yeah, you need some Starlink.
I'll
Spencer, redial in.
Yeah, I'm gonna redial in.
Redial in.
All
All right.
Back to us.
Throw up back to precious metals. Can you throw up slide 10, Spencer, while Jay
Are
New York
we-
Stock Exchange Wi-Fi?
Are we talking too much about the precious metals? Are we doing too much anticipating and not enough reacting when it comes to the gold lately?
Let me tell you
Here's-
something.
here's the
Let me tell you something, young lad. When I see an all-time monthly closing high, I don't give a damn what it is. It could be soybean futures, it could be gold, it could be the S&P 500, it could be Nikkei, it could be Polish zloty. I don't give a damn what it is.
What
I'm
if
going to
it's-
be interested.
What if it's gold denominated in Polish zloty? How about them?
Well, that's even better, I think, maybe, but no. But the gold has already been doing well in zloty. We know that. Gold's been doing well, making new all-time highs in every currency except the dollar. So for me, it's more important when the gold closes at a new all-time monthly closing high, which I don't know if you heard, but tomorrow is the last day of the month. So gold's going to really need to shit the bed to not close the month at the highest levels in history. Yeah, I'm interested. And no, I don't think we're talking about it too much.
You know what it's not making new highs against at all?
S&Ps.
The Bitcoin.
Fine,
Not so
but
good.
okay,
Not
but
so
there's
good
your, but there's your denominator fallacy. If you're going to denominate something in the strongest asset, like of course it's not going to look as good.
So maybe that's the conversation. Gold, while it's starting to look good, if you really compare it against, other reasonable alternative like stocks or cryptos, still not something you really want to run out and buy right now, right?
That's a good point, right? So it's all about opportunity cost, right? People are like, gold has held in just fine over the last 10 years. It's like, well, maybe, but man, if you could have bought anything else and done really well. So it comes down to opportunity cost. When I see something like gold, when we're looking at it here, pushing up against new all-time highs, we'll find out tomorrow if it's a new all-time monthly closing high. Probably will be. We're looking at it in a vacuum. We're looking at it in absolute terms, and then just because it's going to go higher doesn't mean we need to buy it. Investors have to make their own decisions based on whether the opportunity cost makes sense for them, or if they think that there is no opportunity cost and this will be the best asset moving forward. But in a vacuum on its own, new all-time highs is not bearish.
Silver, gold, I want to see break out of this range. It's been in a holding pattern for, God, a year and a half now. More.
That's exactly right. So when, historically speaking, when precious metals are doing well, we tend to see silver outperforming gold. We see that. We haven't at all. Nothing sustainable really.
I'm gonna try to bring Jay on. All right,
Bring him back on. Yeah.
Cool. Oh wait, his camera keeps going on and off. So let's see if this works. Jay,
Can you
you
hear
with
me now?
us?
There
I
he
am with
is.
you. Yeah. Now I'm on an iPhone, and I hope this connection's good. I apologize for the technical difficulty.
No, it's all good. Jay wanted to give a shout out to the CMT Association. We will be in New York City on Stone
On my end.
Street. No, we lost him again. All right, get him out of here. We'll be on Stone Street. Come join Jay Woods and I on Wednesday, December the 6th on Stone Street in New York City. And, I think that there will be some charts. There will be some booze.
I won't be there.
Strazza will not be there. Strazza keeps telling me, people keep asking me if I'm going to be there.
People are asking. So I won't be there, everyone.
Yeah. So, it will be, would it be a better time that Strazza's not there, or would it be better if Strazza was there? What do you think?
Give me a break.
It would definitely be better if Strazza was there.
Yeah. Yeah, for sure. Everyone knows
right.
that.
Yeah, I would agree.
I'm probably the most fun.
Yeah, you're like top 4, top 5. So Josh, I was talking to Josh Brown the other day, and he's like, telling him, "Oh, come down, say what's up," and he's like, he thought that I was going to dress as Santa Claus for the presentation, which would be hilarious, but I don't think they're ready for that. You think they're ready for that much heat?
God, dude,
coming into when is Santa? What's it called? SantaCon? When's that?
That would be so funny, and it probably is right around SantaCon because
it is right around SantaCon.
All right, okay. I got Jay to turn off his Wi-Fi, so I think we have a better connection.
Third time's a charm.
Jay,
yes,
what?
Hey, I gotta go. It's 9:15 now. Yeah, what a show. Expletive deleted. How are you guys doing?
We couldn't be better. Really, we're just nice little bull market, no big deal. Dolphins in first place, 3 games up in the AFC East. How are you doing? Bull market, Eagles look good.
Yeah, win over the Dolphins. Lost to the Jets.
Barely.
Someone explain that to me, please, dear God. Yeah, no, things are good. I was listening in and out on the show because the Wi-Fi here was so horrible. You're talking a lot about gold. It just drives me crazy. I hate when gold discussions go on, but things are good.
Why? Explain to me why, Jay.
Why? Because what? It's tricked us so many times that this is finally going to break out. The pattern looks fantastic. Let's be honest about it. But it just does. I'd rather focus on equities. They act more like they should on the charts. It's gold.
That there are gold mining equities. I don't know if you heard.
Yeah, I saw Newmont had a nice little move yesterday. Good opportunity to short it as it goes into the 200-day moving average, the sloping 200-day moving average. It's a place that has cost it's so much angst in the past that I just don't even look. And then the first thing I listen to when I come on is gold. I'm like, no, let's talk about equities. Let's talk about some good stocks here.
Missed that first conversation, how we were talking about equities. We were talking about sentiment. We were talking about how Charlie Munger, rest in peace.
Oh, rest in peace. My God. Yeah.
And my favorite Charlie Munger quote is that when he told Warren Buffett, he leans over and he said, if people weren't wrong so often, we wouldn't be so rich.
Yeah, that's phenomenal. And then Larry, I retweeted this. He said, 90% of the people don't want to hear about your problems, and the 10% that do are happy you have them. That's just genius. He was an icon, and he was working right up until last week. He did a podcast in his home, in his bed. It's just crazy. I don't know if I want to work until 99, but if it gives me that longevity, and he seemed happy if I had his money, it would make it easier, I guess. But
it's good for the mind, analyzing the market. And I'm not going to be able to help myself. I'm going to wake up in the morning when I'm 90 years old and I'm going to check the futures.
I think I'll be in your boat too. It's just addicting. I don't know what it is about this environment. And then speaking of environments, I heard you talking about the big party next Wednesday. That's going to be a good time. I don't know how much we should be plugging it because the people that responded, it's pretty much off the charts already, which is good. It's going to be good to see you ripping through charts.
Hold on. Am I giving a presentation at the bar?
You are giving one. We have a little back room reserved. We're going to bring a little projector. So if you could just hook in your computer and rip through some charts, that would be great.
That's fantastic. I thought that I misread that because like I was hoping that the presentation was at the bar, but like you are confirming. So we're not going to go like to some, stuffy Wall Street office and then go to the bar. We're going straight to the bar.
We're going to be drinking with you. You're going to have a drink or two in hand as you rip through charts. We're going to be throwing things your way. I know I have to introduce you, so I'll have a nice speech ready. We can talk about your wine. We want to plug that. In fact, I have a good friend that I'll talk to you off air that wants to, get some wine sent to her nice little event. So there's a lot. And then just holiday cheer. My God. Katie Stockton's going to be there. Shout out to Louis Spector, the newest CMT who helped organize the location, and he's bringing the equipment for you to plug into. So it's going to be great.
This is great news, Jay. I thought, like I was telling Strazza, I was like, I think it's at the bar, but I don't think so. I think I'm just hoping it is. So
yeah, the thing I'm worried about is I think we said you're on from like 6 to 7, but I think we'll be there at like 4:15. So by time you hit the stage, you have had a tendency to pass out shots. It could be one of the more epic events we've ever had at the CMT Association.
Woo! All right.
Yeah. Yes, and they may not want to sponsor it if it gets a little too out of control.
All right, Jay. So that's next Wednesday, December the 6th.
Correct.
Email us if you have it registered. But that's going to be a lot of fun. All right. So the Dow Jones Industrial Average is that okay to talk about the Dow?
I love the Dow. It's the best index in the world. 30 stocks. Get Walgreens out of there, and it'll be really the best index in the world. But my God,
it's also the most diversified of the United States indexes.
Yep, exactly.
Contrary to popular belief, the Dow is much more diversified than something like the S&P or the NASDAQ.
And to stop that argument is just overlay the charts for 50 years. They're hand in hand. I don't know why. It just works. That's right. Unbelievable.
That's exactly right. Oh, but it's price weighted. Okay.
Hold on. The Dow Jones people who do this, though, should be pretty embarrassed that Walgreens is even still in there. I mean,
without a doubt.
This stock is almost a mid-cap at this point. I don't know how it's still in the Dow Industrial Average. It's really crazy.
Yeah. It's in danger of getting kicked out of the S&P 500. I mean, it's what's the market cap there? Can you pull that up real quick?
Which one? Walgreens?
Like 40 last I checked.
Yeah. WBA, Walgreens Boots Alliance, not WAG, which I always look up because that was Walgreens before the Boots Alliance.
17 billion. Okay, hold on. Right. Back to the Dow. Here we are. Dow up 100 points here pre-market, less than 2% from a new all-time high.
No.
Jay Woods is a new all-time high. Is that historically something you see in downtrends?
Well, I think it's a little farther from the all-time high. I got the all-time high just over 37,000. We're at 35.5
on a weekly closing basis.
Oh, okay. Thank you for clarifying. And yes, this is tremendous. And what is even more tremendous are the setups that we're seeing. We've had the leadership. We know, and hey, it's technology leading. That's good. Hey, but look at what's following right now. There are only 4 indexes in the S&P Spider Select 11 indexes down for the year. Energy, okay, fine. They had a great 2-year run. They were the leader for 2 straight years. Healthcare is the most frustrating sector to me because it's been basing forever, and the weightings in the XLV are a little skewed. But I still am optimistic healthcare can turn the corner. And then staples and utilities. They're the 2 worst performing sectors this year. That is as bullish as you can possibly be.
That's right.
And what are turning now? Materials, industrials, financials are starting to put their head up. And then if you break down,
U.S. financials are making new 8-month highs. European financials are hitting new multi-year highs.
Yeah. And then if you break down the financials, the leaders are leading. JP Morgan, that looks phenomenal. It's coming back. It could be a double top. We'll see what happens here, how it plays out. Goldman Sachs looked like it was breaking down. It rebounded nicely. It's getting its legs under it. But then I look at Visa and MasterCard. Look at these things on a 2-year base. I mean, rounded base breakout. This is hello, it doesn't get any more bullish than these two stocks leading. That tells you the health of the consumer is there. Yes, we don't like to hear credit card debt is at all-time highs, and now they're going to pivot. Well, they're avoiding the credit card. They're going to buy now, pay later. And look at stocks like Affirm. Look at PayPal, which is an interesting one to watch. It's a dog. It's an absolute dog. Horrible downtrend. But if it mean reverts, from 58 to 65, you've got a nice percentage gain. And if it gets to 65, you're at the declining 200-day moving average. I think that's safe to say. That could be a dead cat bounce if you'd like to call it that. But there are mean reversions in play that are getting back to declining 200-day moving averages in select stocks. And then there are bases that are forming and just breaking out. We saw it already. Microsoft, 52-week all-time highs. Apple already broke out of base. NVIDIA did the same thing. Visa's doing it now. CrowdStrike. Let's talk about CrowdStrike because that's one everyone's going to be trading today. That thing, I'm in love with this stock. I'm in love with some of these stocks in the cyberspace. Zscaler, the reaction to earnings yesterday, it gapped down $7. Where did it close? It closed unchanged. It was a very positive price action momentum swing there. Palo Alto Networks continues, just buy it, put it away. That is the best in class in this sector. And then another one with a great base. Look up Cloudflare. The symbol is NET. People say Fortinet. No, NET is Cloudflare. NET has a hell of a base, and it's just starting to break out. It's just above 75. Looks like 80 is an easy go. And then if it can get to 80 and break above, there's a nice gap to 100. We're talking, 25, 30% gains here, which are just getting us back to halfway where we were before its old peak back in November 2021, January 2022. So the formations are there. We had a bear market. We got slammed in some of these big tech names. Yeah, Meta's up 100% for the year. Okay, big deal. Where was it coming from? What was it down the year before? It just rounded out and broke out. The price action as a technician, the setups are there. This is what I'm looking at, and this is what I enjoy following because I think that this is just a beginning and not an end of a bull run. I think December is going to be strong. Then you throw in seasonals and presidential cycles, and then we have January. And what's been one of the laggards? The Russell. The IWM is right under its 200-day moving average. That can rally an easy 10%. When do small caps tend to do the best? When do we want them to do the best? In January. The January effect is about the small caps. So there are a lot of things lining up.
By the way, the January effect starts in November historically, and it started in November this year too.
Yes, and everyone on TV talking about the Santa Claus rally doesn't understand that's the last 5 days of the trading year and the first 2 of the next. But, it sounds good. I'd like to think the Santa Claus rally started October 27th. That was around the time the Great Pumpkin came to town. So maybe that is what the rally should be called.
The Santa Claus rally started Labor Day.
Yeah. We change it to fit our narrative all the time. But there are, this is the one part like us CMTs, like, well, we studied for this test. We know what the real rules are. And then everyone's just giving them names that sound, nice. But no, there was a reason we called it a Santa Claus rally. It was the last 5, first 2. There's a reason it's a January effect.
Hey, if people weren't wrong so often, we wouldn't be so rich.
Look at you going full circle to Mr. Munger. It's so true.
I love how you go, hello. You sound like your uncle.
Right? Oh, do I? I'm drinking water. You'd think there's
you're getting there. You're
some
getting
energy
like
in there.
Another thing you mentioned before, not to get all fundamental, but you talk about credit card debt, which is hilarious. And yeah, credit card debt is 1.1 trillion, but as a percentage of money in the bank, it's actually the lowest in 20 years.
Thank you. It's exactly where I was going to go, but you took my line.
I'm no fundamental analyst or economist, but that's just common sense. Like, your denominator fallacy is blinding you, you moron.
Yeah, it's relative strength is in a sense, basically, but the consumer saving. And I just talked to my team here. We have Black Friday numbers. We have Cyber Monday numbers. I want to see Giving Tuesday numbers. Giving Tuesday will be a tell to me. I don't know if they have these numbers. Someone find it.
What is a Giving Tuesday?
Oh, my God. You don't know what Giving Tuesday was yesterday. You didn't give? Oh my!
I don't
You
know
didn't
what
get
that
like
is. I've
2,000
never heard of it.
emails to your inbox from every college, high school, charitable organization.
I've never heard of this. I
Every
swear, I've never heard of
501c3
this.
organization in the world. Basically, yesterday was a day of charitable giving. They call it Giving Tuesday. So you have Cyber Monday followed by Giving Tuesday. And
What's
yes,
today? What's today?
today is a day of rest. It's Hump Day. I don't know what
Got
Hump
it.
Day means, but
Got it.
we're just taking it easy today. Yes, Giving Tuesday is actually a day where you are urged to give back and give to charity. And based on the emails that came into my inbox, it was a huge deal. I guess not so much for you, but I gave to my kids' schools, my own school, a nice autism foundation yesterday, and just check the boxes and make sure you're doing these good things. And I want to see if they have numbers for this, because if they do, and that increased, and people are more charitable than ever, then no one's pulling back. Because what is the first thing you pull back? You pull back from, I'm going to cut back on my charitable giving this year. Okay, that's what people do first. Then they cut back on themselves, and then they come back on their family. That's how I've always viewed it, at least.
No, that makes perfect sense. Jay, when it comes to asset allocation, right? You're in the same camp as us, bull market. We're seeing sector rotation, breadth expansion. We're seeing participation globally around the world. I mean, European banks making new 52-week highs, not exactly something that's bearish. We talk about strength through January, right? And we tend to get that weakness in February. So why don't we talk about through January? That's 2 months. Is that too short term for you, or is that a sweet spot?
No, that's the sweet spot for me, because this is the time of year I get really frustrated. I was talking to our friend Craig Johnson yesterday about year-end prognostications. I'm going to have to go on a few shows.
Everybody? I was talking to Jessica Menton last night. She's like, "Oh, I'm with Craig Johnson."
Did she call you first or me first? Because she called me. I hope she's watching. I'm driving home and I get a call. I'm like, oh, I was very excited to get a call on my way home. Not expecting it to be Jessica Menton, and
She's asking me about DeMark indicators.
Yeah. I said call Katie and call Mark Newton. Those are your DeMark guys, and yes, I think she spoke to you first then. But
I gave her some good stuff on the DeMark. I mean, it's really helpful depending on what you're trying to accomplish.
Listen, exactly. I mean, that's what's great about technical analysis. There isn't one indicator that everyone just jumps to and loves. You find what fits your trading style, your trading network, your time frame, your horizon. I mean, for the day traders, they don't want to hear what I think in January. They want to hear about crowd strike on a gap up on the opening, because that's what I used to do, and that's what I'd be following very closely.
So tell me, through January, what's the leading sector?
Right now, I think small caps pick up the boat. I think they're going to chase performance. They're going to look for the laggards, and people are going to rush into those names. So the leaders are going to stay strong. I don't worry about stocks like Microsoft. Maybe they flag a little bit, come in, they retrace. But you're going to have tax harvesting selling. I heard Josh Brown talk about it on his podcast this morning. That's what he believes was why we sold off so much in October. The mutual funds selling before November 1. I don't know if that's true or not, but what I think I see now are a lot of bases, a lot of stocks that have, one, stopped going down. That's the most important thing. And two, have a mean reversion, just a basic mean reversion that can lead us higher. And where are all those mean reversions? Where are the stocks that got beaten down the most? They're in the small caps. They're in the regional banks, the financials. Regional banks are trying to make back. Biotech is hit or miss, because you never know what drug they're working on and what relationship they have.
There's so many of them. I'm talking about as an index.
As an index, yeah. From a risk reward setup, this is where you want to go, because the reward definitely outweighs the risk. And you have bases and you have stop losses that you can set and manage your risk. So you may take a few shots to the arm there, but most of these stocks, you're going to get better bang for your buck by trying to play that risk reward setup that I'm seeing. So I go back to small caps. And I look at some of these healthcare stocks that have been beaten down. They don't look.
By the way,
Yeah.
since last summer when the market bottomed, small cap technology is up 17%. Small cap consumer discretionary is up 25%. Small cap industrials are up 35%. So when people are telling you that small caps are not participating, maybe Your small caps are not working, but there are plenty of small caps that are working great. In fact, outperforming the large cap indexes.
Without a doubt. And they're up 25, 30%. Where were they down from? They still have a long way to go. So if you didn't look at a stock like a firm. You're talking buy now, pay later. It's technically a small cap. AFRM is the symbol there. That stock is just breaking out, has a lot to reverse. I don't know if I would want to jump into it after missing this move, but if you back it out, oh my God, there are some stocks, a lot of these SPACs that went public that are still lingering. One of
By the way, it's
my
already at 10 billion, so it'll be a large cap by the end of the day.
exactly. So yeah, but it was a $140 name, so it was a $50 billion company not too long ago. If it just retraces half of that move.
It was also a $3 billion company not too long ago.
That is also true. It's crazy, these valuations. But right now it's hot, and you may be able to ride the wave a little bit. You know what else was hot? You see GameStop yesterday? See what's going on there? Like, this has me a little concerned. We're coming back. There was chatter online. Their earnings come out. Their earnings come out the night of our party, so we may have to pause and watch the TV for GameStop earnings while we're out there having a few cocktails. But it's a stock that has a lot to reverse, but I wouldn't touch this, given the long-term downtrend of it. But you may get another 20% pop in this thing, given the momentum that's come into the name.
If you're trading GameStop, you should see a therapist.
I agree. But this is what's
help.
moving.
They have hotlines for this sort of thing.
Yeah. I think we've called those hotlines in our past lives as well as traders. But that has me a little concerned that now we're getting this all-in mentality, and now we're gonna see a little momentum. But that momentum
GameStop went up one day, and you're saying that concerns you? Come on.
Let's watch it into earnings. There's chatter. It's got that little buzz coming back. All right.
GameStop earnings. Jay.
Listen, I don't believe in GameStop. I think it's a dog, but I'm telling you where the momentum just went to. That scares me. All right. It's one day. It's not a trend, but it's something to keep an eye on. I would not be trading it with anyone else's money. But it is something that just, I was like, wait, GameStop? We're back? No, it's not. It's not back.
Somebody who loves the Dow, somebody who's a floor governor of the New York Stock Exchange, someone who bought IBM as his first stock, someone like you're a DL junkie. You have to just embrace it, Jay. Every time I talk to you, you're talking about the Tesla or some software stock. Like, you are a tech stock junkie.
That's where, I was also a trader for 30 years, and that's where the action is. And now I don't trade actively like I used to. The bell is about to ring behind us, so pardon the noise, but giving you a real feel for what's going on. But yeah, no, I like to see where the action is. I like to follow what, I have an 18-year-old that follows the market. And, at Thanksgiving, what do they talk about? Bitcoin is back in favor, and we're talking Bitcoin again. We're talking AI stocks, and then cyber stocks. These are interesting places to be. They're not all going to be winners, but when you see momentum, you see something, your eyes get struck to that. So that's where I go.
I like how they make the people clap in the balcony.
They're excited. Build-A-Bear, we're ringing the opening bell. Who's not excited about Build-A-Bear? You've been to a Build-A-Bear. I know you've been to a Build-A-Bear.
My kids aren't old enough for that yet.
Yeah. Well, you get like a Philly Fanatic Build-A-Bear, those things. Oh, my God.
I doubt it.
Yeah, I have a few of those. Those are good.
I'm sure you do. Jay Woods, one stock right now. What do you like?
One stock, I love CrowdStrike, but I'm going to give you Cloudflare, NET. I think that base is just starting to break out. I think it's going to go for the longer term people. I love Visa. That's it. But Cloudflare for a trade and a possible nice run, and Visa, CrowdStrike, buy them, put them away. I think they just continue to go higher.
Jay, I will see you on Stone Street next Wednesday,
Can't
December
wait.
the 6th. And by the way, we're going to that basketball game in Philly in January. We're all set.
That's right.
We're ready to go.
And then Dolphins-Eagles Super Bowl in Vegas in February.
That's exactly right. Oh, all Jay,
right.
I'm going to be getting a lot of Jay Woods. I like it.
It's a great thing.
Like it. It is a great
All
thing.
right.
All right, man. Go
Good
get
talking to you.
Right.
Bye.
Thanks a lot, Jay.
Thanks.
Jay
He's
Woods.
right about these cyber stocks. I don't want to steal any more of Mary's thunder, but We were planning on talking about
One
that
time, I'm walking around the New York Stock Exchange, right? And I know where Jay, like, he used to be like in the same like booth. What is it called? Booth? It's not a booth. What are they called?
Yes, it is a booth.
There's another name for it. Whatever. The booth. He's in the booth, and he was always in the same booth, obviously. And I just walk over there to say, "What's up?" He's reading the Elliott Wave Principle. He's just reading the Robert Prechter Elliott Wave book. I caught him. Fun fact. Isn't that funny? It was a long time ago. Yeah, isn't that funny? He was studying for the CMT, like level 2 or level 3 or something like that. So he was reading the Elliott Wave book, and I caught him. I thought that was hysterical.
Jay's one of the best.
How great is it that the CMT event is at the bar? That's fantastic. Because usually I'm giving the presentation and everybody wants me to shut up so we can go to the bar.
Right.
I'm very glad that Jay mentioned GameStop because I didn't want. I mean, I wanted to, but I didn't want to. If you know what I mean. So I'm glad he did it because it was on my list of things to.
Dude, it's up 20% this morning, man.
Keep an eye on today.
Christ.
Yeah, the 6 or 7 week high here in GameStop. So
this is very worthy of mention for what we try to do here every day because it speaks to the animal spirits, right? Just the behavior among market participants. It's not about, we want to be going and buying GameStop or any stocks like that. But if these heavily shorted names are squeezing, that just speaks to the environment that we're in, right? Tend to see these squeezes in bull markets, not bear markets.
Yep. So a couple other things, I guess I'll run down my list here of things I had to discuss. Watching GM this morning, watching GME, obviously, and then also watching GM. Pop quiz, JC. You've just settled a strike, a multi-front strike with your unions. What's the first thing you do? All right.
What is it? Tell me about this communist. What happened with the unions?
You raise your dividend and announce a new buyback. That's what you do. It's the first thing you do as a public company.
I don't deal with unions. I run away from them.
I know.
They are not good people.
All right. General Motors, as my computer decides to freeze here, announced a 33% dividend increase, and I believe it was a $10 billion accelerated share buyback program beginning next year. Now, they also reinstated their prior earnings guidance now that the strike is out of the way. So, watching GM this morning, Wall Street likes to see that. Interesting headline, not going to move the stock at all, but Apple and Goldman Sachs are ending their credit card relationship, which is not new news. There have been reports about that going back to, I think, the start of the year that Goldman had tried to get out of that or tried to offload it. And now Apple says, don't bother, we'll end it ourselves. So that's going to end next year as well. If you have a Apple credit card through Goldman Sachs, you'll probably end up just they'll probably end up with a new partner of some kind.
They're not ending that service. They're just ending the relationship with Goldman.
Yeah, exactly. Okay. Oh gosh, what else was on my list now? We had some earnings. Disaster stock of the day is Leslie's, LESL, getting cracked on their report. Stock was down like 50% this year. It's down more now.
What's that?
Leslie's, the pool supply store that I would get dragged to every Saturday during the summer months because my parents have like an ancient pool that was always having problems. Yeah,
my dad. That's so funny.
Yeah, and what else was on my list here? I don't know. I think that may have been it. We had a few other earnings, but nothing too interesting. Good day for Lyft yesterday, by the way. Just noticed that. But anyway, all right. Should we bring Mary on?
I think we should.
Is it time for mornings with Mary?
Mary will be there in New York City with us next Wednesday. If you'd like to hang out with Mary, she is lovely. She's way nicer than I am.
Speaking of that,
I won't be there. I won't be there.
All right.
Somebody has crazy FOMO that he's not going to be there.
I did drop the link in the chat to the event next Wednesday. So let's bring Mary on, see what's doing.
Good morning,
Mary,
guys.
what is up?
Hey, how's it going?
Good.
Just a nice bull market. Dolphins are in first place. 0 for 2 last night. I couldn't figure out if I was going to watch the Heat play Milwaukee or the Hurricanes play Kentucky, and I chose the Miami-Kentucky game, and both lost.
Yeah, neither one. Well,
Sorry
Well,
about that.
Hey, you win some, you lose some. I'm winning a lot these days, so I deserve the good hell.
Don't discredit the Lions. They're still in the running for the Super Bowl.
How about that?
How about that, right?
Best start to the Lions season since what year?
Like somewhere in the 60s.
Like the
60s
Great Depression or
50s,
something?
yeah.
Yeah, it could have been the Depression for all I know. It's not in my lifetime.
Since before the S&P index was a thing. How about
The
that?
craziest thing about the Lions is that the two greatest players in franchise history left in the prime of their careers because they would rather not play football at all than have to play for the Lions. That's crazy stat, right?
That's pretty bad.
Barry Sanders and Megatron, right?
Barry Sanders was so awesome.
He was the man.
I got a Barry Sanders thing I could put for Shockey. I could sub
Barry
it in.
Sanders. Dude, you watch Barry Sanders highlights, it's like a video game. It's crazy. Watch his college highlights when he was at Oklahoma State. What a stud, dude.
All right, Mary,
Yes.
what are you watching today?
Well, so we've been talking cybersecurity stocks for quite a while on the All-Star Charts side and on the analyst team. And so it was funny when Jay brought up, I had brought along the Zscaler chart. And so you can throw that one up. I was so impressed yesterday when, and I think Jay even mentioned this gap down on earnings, and then it ended up finishing in the green for the day. And so that kind of strength really stands out to me. I'm not in this one yet, but I'm watching this one closely because it's right there at the level that we're interested in. The volume yesterday was massive. I think this one, as long as we continue with this bull market, I think this one goes too.
It's breaking out here today. We're triggering an entry off of a beautiful candlestick, recouping all those early day losses on the heels of earnings yesterday, now gapping higher today. So resolving this base in a decisive fashion makes us like it even more.
Yep. Yeah, and this one comes from our 2 to 100 scan that we run on All-Star Charts Premium, where we're looking for the next, $100 billion company?
The next big thing, really.
Next, the big thing. Yep.
It was a Lindsay thing. It was a Lindsay and I were boozing, and he's like, JC.
All you guys. It was all you guys, definitely.
Well, if you let me finish, I was actually about to give you credit, asshole. Lindsay, we're having sushi and we're boozing. Actually, he wasn't boozing, I was boozing, and he's like, JC, we need to find the next $100 billion company, and I'm like, hell yeah, we got to do that. How do we do that? And he's like, you have a great team. Why don't you figure it out? So I call Strazza and I go, Strazza, we need to find the next $100 billion company. And he's like, I got it. We got to take out these industry groups because they're never going to get there. Like he knew right away. And we got together and we figured out a formula where, we made it essentially mathematically impossible for the next $100 billion company to not come from that list, right? We sort of reverse engineered that. And to Strazza's credit, if you'd let me get there, Strazza, his idea was to kick out industry groups that just can't scale like that, like utilities and staples and some of the other stuff.
So we start the universe with like secular growth industries, and then we simply scan for strength, right? But we remove a lot of cyclical crap or staples, utilities, stuff that's just never really going to grow like that. Because if you go back and look at some of the biggest tech stocks today, they started out with market caps way, way smaller than where they are now. That's the idea. Cybersecurity obviously falls into that category. And I think the 2 to 100 last week was all cyber stocks. It was 3 cyber stocks. Do we have the CrowdStrike chart too?
I didn't bring that one with me, but the 2 to 100 is one of my favorite scans, one of my favorite universes that we have. I look at it.
You're a
often.
DL junkie, Mary.
I am a DL junkie. Yeah, and so of course, with my junkie nature, I of course brought some crypto charts too because I've been pounding the table on crypto for months and months and months. So
Good day yesterday.
Fantastic day, right?
Yeah,
and so we've been talking here on the show a lot about Coinbase, and we got involved in that one a few weeks back, and that has been a huge winner. I actually have people messaging me on Twitter, saying thank you for talking about Coinbase because it's been such a big winner, which is unusual to me because I've got like all of 10 followers. But it felt good to have someone mention that they were making money from things that we're talking about here on the morning show. And so I also brought along Riot and Mara because you know that I like the junky stuff. When you anchor the VWAP to July, we are now trading above that anchored VWAP. And so I feel like there is a catch-up trade here. If you compare it to the coin chart and the anchored VWAP from July with coin, obviously it's made a huge move. And I feel like there's the catch-up trade in these miners now that, with the market doing what it's doing, I think these might have real potential to squeeze fast.
There is nobody on the planet that consumes All-Star Charts content as much as Mary. And it shows the things you say, how you say them, the charts you bring. Like, it's so blatantly obvious how much content you consume from. I mean, it is ridiculous, Mary.
I'm a fan, a huge fan. Made a lot of money, you guys. I have to give you major props because I've made a lot of money from all of the help and insight that you guys have given me over the years.
Well, I appreciate that. Spanky Pants 69 this morning was telling me what an idiot I am. So on Twitter. So I appreciate the.
It's one thing to just read the research, right? We'll put out a lot of long ideas, especially in bull markets. Another thing to trade them according to a plan that kind of we try and outline. And I think Mary's pretty good at that. She does pick the junkier ones, and I love her for that.
We'll call them higher beta.
Yeah,
I like that, higher beta. Exactly.
Higher beta, we'll call them. Yeah.
Throw up the Coinbase Bitcoin chart, Fonz. Let's talk about this, right? Because sure, Coinbase. What did Rachel just said? 30% in 2 weeks. I think it's more amount. It's a lot better than that. It's almost 100%.
That is
very
impressive.
Coinbase has been parabolic. It's been amazing.
But what has most crypto been doing over this time over the past? It's really like 3-4 weeks now that Coinbase has just been moving literally in a straight line higher. It almost doesn't have a down day since late October. Bitcoin is really consolidating. Gains from earlier.
Well, and what we liked about Coinbase was you're getting the exposure to also the alts, which have been outperforming here. So as Bitcoin has been resting, I mean, it still obviously looks fantastic. I think it's getting ready to make it the next move.
Yeah, and that's a great longer term point, but the alts have been consolidating too. I could throw up a chart of Ethereum, it'll show the same thing, sideways while coin's ripping higher. You look at, listen, I have a confession to make. You were talking to Jay, it seemed like you guys were doing your thing. I'm over here buying Solana on my iPhone. So these coils, these flags look like they are resolving higher right now. What is Coinbase going to do if these things are just now breaking out after a couple of weeks of sideways? Coinbase going to start going down? I don't think so. Our next target's 160. I think we get there in the next few weeks.
I hope so.
Speaking of crypto and Bitcoin and all that and the alts, I'm dropping our link in the chat once again to our free crypto report. Put out a couple weeks ago now. Click on that link. I'll throw it up on the screen as well. Download it, and you get all the ideas from the team about how to play crypto right now. There's a link on the screen. Link is in the chat. Check it out. Also, by the way, I had the number on the screen. If you want all access to the research that Mary is referring to, where she cites JC and Steve and all these guys at All-Star Charts, talk to Mary.
It's a great report.
She can help you out.
Yep. I'd be happy to talk to anyone about All-Star Charts or any of our other services, and because I use them all. And if you missed our Black Friday special, it is no longer online, but if you give me a call, I'll hook you up.
And you can, when you talk to salespeople, usually they're really dumb and they don't actually use the product, and it's very obvious. As soon as you talk to Mary, I mean, you could see here in the show, but as soon as you talk to Mary, she's very intimately familiar with the products. So whether you're interested or not, call Mary. She's great.
Mary was not here on the show last week. She was doing some channel checks for us in Disney World. So do you want to report back? How were the lines?
I actually mentioned to my husband, it seemed like, considering it was a holiday, it seemed, we did the Genie Plus, pay all the extra things to, cut in front of people. But it did not seem like we were waiting very long, and it did not seem super packed. And so that was kind of nice from that standpoint. But for the holidays, the parks did not seem as busy as I thought they would be. So it was good for my family because we got on everything that we wanted to and did it multiple times. But I don't know. I didn't seem quite as busy. Oh, yeah. So
look at Mary.
Saturday was a especially good day because, happiest place on earth. And the Michigan win. So we were all sporting our Michigan gear. Yeah, big win. So we took 3 hours away from the park, went to the hotel and watched the game, and of course, screaming. And
They don't have a sports bar at Magic Kingdom?
I'm sure they do, but there were Ohio State people walking around, and I just
Gross.
didn't want to mix with that. So
No, you don't want anything to do with those people. That's gross. You're better than that, Mary.
Mary,
Yeah.
Mary, what is it about Michigan people that wear Michigan swag everywhere they go? I can't escape it. I really can't escape. Everywhere I go, even like in New Jersey, I went to the grocery store. I see it. I was at a funeral, and somebody yesterday. There was a Michigan jacket. I was like,
at the funeral.
Yes, I was like, I cannot escape this school. Like, why? What is it about Michigan people? that just
Winningest
have to
program
wear-
in history. I mean,
They just have to
can't
wear
fight that.
Michigan swag
Oh my God, they
everywhere they
they were
go.
winning when it was like 4 teams. It was like Army, Fordham, Columbia, and Princeton, and
Well,
Yeah.
we got over 1,000 now. We just hit. Well, Ohio State was 1,001.
There we go. All
So
right.
I don't. Big school. There's a lot of pride associated with the University of Michigan, and a lot of people come in from all over the world to go there. So
That's true. Okay, great question from the chat from Curtis. I just signed up for All Star Charts Premium from the Black Friday sale. What are your guys' favorite parts of All Star Charts? Favorite scans, favorite reports, favorite anything?
conference calls. That's
conference
everyone's favorite.
calls are
Gotcha.
easily the number one thing that I hear from people that have joined, or they always say conference calls. We do them twice a month, the monthly candlesticks, and then the mid-month call where we dive a little bit more into more trade. There's always trade ideas, but I love the monthly candlesticks because then we take that zoom out and get the bigger picture about what the markets are doing. 'Cause, like me, I have sometimes get consumed by what's happening on a day-to-day basis, and I need that kind of recheck of zooming back out and knowing what is actually going on, and not kind of filtering out the daily noise. And then the mid-month call also is a great way to get more trade ideas and kind of reevaluate what we're doing with where the areas of strength are in
That's
the
a
market.
lot of value to me personally, as well as the rest of our team, kind of putting our thoughts together every couple of weeks. I'm really looking forward to the Portfolio Accelerator in January because essentially it's going to be like a conference call on steroids, right? It's going to be 2 full days. So you want to talk about the value add, of course, to people that are attending the Portfolio Accelerator program, but even to us selfishly, as valuable as the monthly conference calls are, this is going to be taking it to a whole nother level.
Conference call next week. It is the first week of the month. So you've got that to look forward to. And then, JC will sometimes share a couple highlights from the call, on this show the morning after, but that is like a mere snippet. It is a microcosm of the call itself. Maybe JC will share 3, 4, or 5 charts when he went over like 100 or more.
150
call, right?
usually.
150, yeah.
100.
All
Spencer.
right,
Spencer.
150.
Spencer.
Well, in fairness to me, I think I've missed the last couple because I've had things going on.
That's
so
rude.
I haven't had. I think I missed both your November calls for reasons beyond my control. But in any case, yeah. So 150 charts, and maybe he goes over 3 or 4 of them the morning after. So you really, you get the meat and potatoes on the call itself. So we'll talk about it next week when we have a firm date for that for the All-Star Charts people. But
Drop in the
anyway.
Portfolio Accelerator for those. So I know there's some people asking.
Yeah.
And to Curtis's question, so the 2 to 100 scan, that's one of my favorites. We just talked about, looking for the next big thing. I also like Under the Hood, which is a momentum report. So if you're kind of more of a shorter term trader, you can look at the different
Also,
trade
it's long.
ideas.
It's long and short. The Under the Hood, right? 2 to 100
Right.
club is long only. We're looking for $100 billion companies. But yeah, the Under the Hood is long and short. Really like that.
Yeah. Yep.
Hot corner's really good too.
Love the hot corner.
Hot corner coming in hot. Hot.
So hot.
So hot right now. What do you say we do a little recess there, Spencer?
I want to take a question from the chat first.
Okay.
What's up with Interactive Brokers? Listen, it's not this news. I was just on their website checking out the investor relations page. They did just announce that they're expanding in Hong Kong for cryptocurrency. That's not what's driving the stock lower these last 2 days. What is driving the stock lower is what this company and most broker dealers do is on the very first of the month, they drop a press release and they basically give performance metrics for the month before for their brokerage. If you go to their investor relations page, you'll see a press release the first of every single month. This price action is front running probably what they think will be bad news. And it makes sense that they had a bad November because brokerages make money off of volatility. And volatility has been absolutely dead. So investors are simply selling the stock in anticipation of the brokerage performance metrics that they'll drop in 2 days.
Good thought. Good thought. All right, let's do some recess.
What do you got?
I'm gonna reiterate next Wednesday, guys. It's gonna be awesome. If you're in the New York City area, it's gonna be a blast. I didn't know some of the people that are gonna be there that Jay Woods mentioned. Also, we've got a bunch of other friends of ours that are going to be there. It's going to be a great time. Even if you don't give a damn what I have to say, or you don't care, or you've heard it enough times, there's going to be a lot of really smart people there to talk to. Go for them. Also, I've only spoken at the CMT, New York City CMT Association chapter once ever. So this is only the second time that I speak. And this is really special for me in particular because I lived in New York City for so long. I spent so many years going to so many CMT events. They used to have these things once a month back in the day over at the Bloomberg building. I was there every single month. I listened to everybody. I met everybody. And a lot of the things that you hear me talk about today that I say very nonchalantly because it's just kind of common sense to us at this point, I learned going to those CMT events in the 2000s. And I highly encourage you, find your local chapter, whether you live in Chicago or Northern California or in Texas or wherever it is that you live. Find your local chapter, even if it's not that close to you. Make it a point to go to those events. The one in Chicago is fantastic. Mary can attest. We were just there, like a month ago or so, a couple months ago. Fantastic. I think the Chicago chapter run by Matt Nygaard is the best chapter in the world. Certainly most consistent in terms of events these days. So shout out Matt Nygaard. But yeah, find your local chapter, get involved. You can learn a lot.
All right.
Yeah.
I dropped the link in the chat. This is what it will be next Wednesday. So
Spencer Israel will be there signing autographs.
Spencer, you coming?
I will be there. I'm sure carrying JC's backpack.
Sounds good.
I'm not even taking my back. Oh, I have to take my laptop. Shit. All right, you can carry it.
Yeah, no, I don't really want to. Okay. I don't really, I haven't had a good recess for a while. I don't really have. My life is pretty much like consists of every day assembling furniture and buying new shit.
Why don't you go to Hoboken and get yourself a sandwich?
A sandwich.
Listen to me. He doesn't listen, Strazza.
Listen
to me.
Dude,
Strazza, explain to Spencer when it comes to...
It's so out of the way from me.
Strazza, explain to Spencer when it comes to food and wine, that's when to listen to JC. Ignore me the rest of the time, but food and wine...
I would get the sandwich. If it was me, I would have already got the sandwich.
Yeah, go get the sandwich. Right. Submarine.
Yeah. Hey, speaking of food, is someone going to be able, since I'm coming into the city next week for this event, is someone going to be able to take me for a slice of New York pizza?
Yeah.
Y'all talk about it.
What time you get in?
2-ish.
Sounds like we're going to Prince Street. We going to Prince Street.
All right, no more talk. No more talk about this.
Oh, are you having FOMO, Steve?
He's having such FOMO. All right. We're getting Prince Street. Done, Mary. You and me, Soho. Let's go.
I'm excited.
Hell yeah.
Put up my DraftKings chart. Let's talk about DraftKings. Question about
DraftKings.
I was wondering what this was.
Does this make sense to anybody here?
What are all these lines and colors, Strazza?
Go down here. This is called volume at price. All I'm trying to do here is illustrate that price has moved pretty swiftly through an area with very little price memory. You see on the left-hand side here of the chart.
Wait, are you telling me that that most of the volume occurred near the all-time highs? No way.
You see that top there, right?
No, it didn't.
Consolidation.
It wasn't at all-time highs. It was at the support and resistance below all-time highs.
You had a consolidation.
I said near the all-time highs. Near it.
In 2020, 2021. You see on the left-hand side of the screen.
Highs. Are we looking at the same chart?
In 2020 and 2021,
in the mid 50s. Oh my God. Okay.
we were consolidating.
Talk about the
It ended up
70s.
being a top, right? Then we just collapsed lower, and then we consolidated again, where you see the lower red rectangle, right? That ended up being a bottom. Now we're moving pretty swiftly again through this area with very little price memory, but we are approaching an area with far more price memory, right? Where you might see the rate of change, right, or the rate of trend decrease or kind of normalize a little bit. So I guess what I'm really saying here is it's getting to the point where the easier money, the chunk of this new uptrend might be over, right? As we're approaching those old highs. What do you think, JC? Am I overthinking it?
You know, I like that you're bringing up the volume by price. This is something that I think, particularly for newer investors or maybe people who are new to following price behavior, this is really helpful. It's like training wheels, you know, like so you can, especially like at first, you can really identify where the volume is.
Yeah.
When you've been doing this long enough and you've been following price, you'll notice that you don't necessarily need those anymore.
No.
Because you can kind of just get a pretty good idea as to where the volume is based on the churning.
100%.
But it's a good way to, it's a good visualization, particularly if you're new to this, you can really see, you know, where the volume is. Now, Strazza and I could pull up any chart and we could tell you with almost certainty where those volume bars would be, right? And, you know, but this is a great way to start doing that. And then eventually you don't need them anymore.
Price tends to trend better through areas that are uncharted, right? Areas that have experienced less volume, fewer transactions, less trading history in the past. And for something like DraftKings, we're getting there. You could say the same thing about Uber. You could say the same thing about a lot of these, right? And then you could look at something like NVIDIA or Microsoft and look at how they acted once they got to those old highs. More consolidation, more digestion, right? It got harder. It wasn't a straight line higher. So that's what you should expect from these lesser leaders, Ubers, DraftKings, as they approach those old highs, right? Just for it to get a little bit tougher before, and they'll have to work through it.
Hey, speaking of Uber, the news feed that we watch, are you seeing that there's talk being mentioned as possible add to the S&P 500?
They're getting added. Everybody's been talking
That's
about
old news.
They've been talking about that.
Sorry.
This is the big whisper news. People get excited. It's probably had a lot to do with the stock running up, anticipating this. But yes, they better get added because the stock is priced it in, and they will.
All right. Thanks to Mary for hanging out. Thanks to Jay Woods, as always, for stopping by. Thanks to all of you in the chat. If you'd be so kind and hit that like button for us. We've got 60 likes on YouTube. Let's get to like 100. That would make my life just a little bit better, and it would help more people find the show because these likes drive the algo on YouTube. That helps more people find us. So we'd appreciate that. As always, on Wednesdays, we have What the Fick coming on at 12:30. We have the Hot Corner coming on at 1. Stay tuned for that right here on Stock Market TV. And that's a wrap. So have a good rest of your day, everyone. Go make some money, and we'll catch you guys later.
Bye, everyone.
Getting pizza. We get a pizza. I like
I can't take no loss. I don't even know what it costs. I hit the ground, then I go